Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over $116,000. That's made up of the $61,888 in my US stake portfolio, and then the $54,134 in my Vanguard account. Between these two accounts, I've been investing for nearly 5 years now and growing these portfolios since I turned 18 years old. As you can see, my US portfolio is up around 25% at the moment. That's not fully accurate, with positions I've sold and reinvested the gains, and then I've been dollar cost averaging in for time, so that has brought this percentage down. But overall, I'm up around $12,500, even with the volatile market that we've had this year. And then in my stake portfolio, I'm up a decent amount as well. In my stake portfolio, I mainly invest in two ETFs. I used to invest in a bit more, but I've narrowed this down into two positions I had a bit more comfort and belief in. In my stake portfolio, if we have a look at some of my holdings, you'll be recognizing a lot of these businesses. A lot of them are the big tech giants. One of them is a staple that many of you might shop at is Costco. And then VOO is my biggest position in this portfolio, which tracks the S&P 500. Overall, this is one of my biggest holdings. It's just smaller than in my Vanguard account, but it is sitting at around $18,000 USD. And overall, I'm up around 30% in this. I've been dollar cost averaging into VOO for many years now, and if you've seen any of my videos on here previously, this has been a staple in my portfolio since the beginning. And if you have a look in the last 5 years, VOO is up 92%. That's been great returns for many investors, and overall, as I keep dollar cost averaging, obviously that is lifting my average share price up. I have an average buy price of $420 a share, but I think long term, it's going to be worth it. Sometimes I do get questions on why I decide to keep so much of my portfolio in ETFs. One of the reasons is I don't personally think I'm some amazing investor. I like investing, and that's one of the reasons why I keep around 20 to 25% of my portfolio in individual stocks that I truly believe in over the long term. I've done lots of videos on Amazon, Apple, Costco, Alphabet, and Microsoft over the years to justify my positions, but overall these are companies that I really do believe in long term. Positions such as Amazon, which is trading at $212 a share right now, I did many videos of it during its recent drop and my buying in. Overall, I tried to invest more than I could. I couldn't quite time the bottom of the market like no one can, and I did invest while things were a bit higher, but my average share price is still $196 a share, and I have around $7,000 USD in total equity, and I'm up around 8%. Amazon is a company I believe in long term. I think they'll be a real beneficiary of AI in their warehouses, in AWS, and lots of things going forward, but I'll touch on them a little bit later as well. Some of the other companies I have is Apple. Apple was actually the first stock I ever invested in, and you can see my total position's gone down to around $1,000 USD. This used to be a bigger position, but I did sell out and take some strong gains that I had in the stock when it was trading at highs, and I'm currently up around 21% after my recent selling. Some of my other positions are staples like Costco. Costco's been a great performer for me. I'm up around 72% in Costco, and I used to have more, but same as Apple, I sold out, took some gains, and reinvested that into companies I believed were underpriced at the time. That was Google. Google is a company I've been growing my position in, like Amazon, and currently my position's around $6,000 USD in equity, and I have around 6% in the green at the moment, with an average share price of $164. This stock has been extremely volatile recently, with lots of fears around Google's search dominance going forward and what's going to happen with the company. Overall, it trades at the lowest PE ratio of all the big tech giants, the Magnificent Seven, and I think it's a great company to hold going forward, as they do have a very strong cash position and they do generate a lot of cash on top of that. So I think it's going to be good for me going forward, and that's one of the reasons I grew my Google position. Overall, this is kind of what makes up my US portfolio. I used to invest in a lot more stocks, things like JP Morgan, McDonald's. I still think those are great companies, but overall, as my investment thesis and kind of things that have been going on, I've kind of narrowed things down a bit more to, again, this is just 6 positions. I used to have a lot more. I think over time, through all these market flows, I've noticed I have to invest in companies that I really do believe in long term. And I think JP Morgan as an example, that is a company I would still own today. I was so much in the green and I sold it to lock in some money. But if I had to buy that company again, it's a bank that I think will be here many years into the future. But again, I don't think I'm some amazing stock picker. I personally get a lot of fun out of picking stocks and I've been doing it for years. But again, majority of my portfolio's wealth is in ETFs. So again, take VOO as an example. This is one of my oldest holdings. One of the reasons I invest in it is because it does give me broad market tracking, diversification in probably the best market in the world, the US market. And overall, I think this will be hard to outperform over a really long period of time. I think lots of investors will struggle, especially when you bring in transaction costs from selling and reallocating and balancing. And then all my dividends I get from VOO, which are my biggest dividends in my stake portfolio, I reinvest right back into the portfolio so I can get that snowball effect over time. In my Vanguard account, I manage the same philosophy. Going forward, this portfolio has grown a lot. I'll show the Excel spreadsheet a little bit later of kind of how things have really grown across these portfolios. But this used to be a very small compared to my stake portfolio in terms of a percentage. And it's now sitting at close to 55,000. That's my next goal, is to get this to 55,000. And yeah, it's been great for me. Like I said, my biggest position by far is VGS. VGS is Vanguard's international shares ETF. It tracks a real global, I think it's 1,500 shares. And it's trading at around $140 a share now, and I have 311 shares, taking my total position up to $43,368. So if we have a look at this position, like I said, it's had a great past year, 17%, as many stocks have done quite well. Again, it's got a very low management fee. Again, this isn't financial advice, but that's something people should be looking at. You can get some with a bit lower, but this is a good ETF that I personally like. It does quarterly dividends, so I'm not a dividend investor, but like I said with my VOO position, all my dividends are reinvested back into my portfolio because I think long term that's the best decision I can make. Its international shares excludes Australia, hence why I have that other Australian position. And yeah, like I said, 1,500 companies across 23 different countries. And if we have a look at how it's kind of been doing for these last 5 years, it's done very, very well. Trading all the way from $78 back in 2020 to where it's sitting at now, $140. And I was heavily investing, trying to buy this dip here. I bought a decent amount there, and that's what's kind of helped me grow this position even more. And again, I think this will be a great hold for me long term. Again, if we have a look at these two portfolios, I mentioned it at the start, they're sitting at $116,000, but this hasn't always been the case. If we have a look at my Excel spreadsheet, you can see these two portfolios over time. So I started investing a bit before this, but I wasn't tracking it on this Excel spreadsheet. But this just kind of shows the journey from all the way from $2,900 in my stake portfolio, my Vanguard portfolio, and $17,000 in my stake portfolio. Just this long journey in both the accounts of consistently dollar cost averaging over an extended period of time. And you can see this nice trajectory, especially my Vanguard account's been on. Things have been up and to the right. Again, since it's so early days, a lot of this initial part was just me depositing money in consistently over time. Even during 2022, when markets had a very, very rough time, if you remember that, I was buying in and growing positions that I really did believe in. So again, that's what's worked for me. You have to find what works for you. Over 5 years, I've learned a lot of lessons in terms of companies I believe in. There were times, I still have old videos on this channel where you can see where I was investing in companies like Alibaba. Again, it's a great company. I didn't know too much about it. Companies like NIO, which is an electric car maker in China, and I sold all those positions. I actually was quite lucky. I sold NIO at a strong gain. But it's taught me a lot about investing in companies that you really understand and not just investing in companies that you see a lot of content on. Again, that's why I always encourage people to do their own analysis on positions they believe in and find what works for them, because at the end of the day, you need to find something that works for you, because you're going to be on this long journey for an extended period of time. Like myself, I know I still have decades and decades of investing ahead of me. So these early years are just about the foundations and building the right outlook, building the right mentality when it comes to investing. And that's kind of my goal going forward. If we have a look at my two portfolios, you can see my Australian portfolio is split around 80-20, 80% in, like I mentioned before, VGS, and then 20% in VLC, which is a index that tracks a lot of the Australian companies, the 20 biggest. I potentially will sell out of that when I go for a deposit for a home, but at the moment it's doing pretty good for me, and it pays a very strong dividend that I reinvest. In my American portfolio, you can see there's a bit more players, and that's quite spread out as well. Some of the big players obviously take up a bigger percentage than I like. I want to get VOO to 50% of this portfolio value. But even dividends, last month was a very slow month for dividends. I got $2.64 in terms of dividends in my stake portfolio and nothing in my Vanguard, because my Vanguard portfolio is quarterly. But this is kind of how things have been going over time. Again, I always stress the fact that I'm not a dividend investor, but as your portfolio naturally gets bigger and you buy more shares, typically your dividends will grow with it. And if we have a look at just my 2024 and 2023 amounts, my 23 amounts were very small. My 24 amounts got even bigger. And so far with 25, and we're only halfway through the year, it's already bigger. My Vanguard's bigger, and my stake will catch up in terms of dividend size. So I'm definitely going to beat what I had done in 2024, with a goal of potentially even hitting $2,000 in dividends if I keep investing at the rate I'm investing in currently. And then up here, I'll track my total dividends I've received. And you can see this is USD. So if you put it to AUD, I'm well over $3,000 in dividends. And again, all of that's going straight back into my portfolio. I didn't do a video last week because I've been quite busy. I am studying for the CFA exam, if anyone knows what that is. It's a finance exam, and it's been quite busy with work as well. So that's why I haven't uploaded recently, but that's just kind of life. Things can happen and you can get busy, but I'll try to keep staying consistent on here, especially these upcoming months before the exam, and just kind of tracking my journey as I grow this portfolio. Cheers.